Okay, now. Before we start, I said something yesterday. I have 3 rules. If you want to follow this trading strategy I'm about to show, first of all, you have to forget whatever you have learned from other places, like your previous strategy, your how you view the chart. You have to forget all of that. And number two, you have to be a patient trader. You have to be a patient trader. You don't have to trade all the time. You be very, very patient trading this concept. And number three, you have to follow everything I'm saying step by step for you to see results. You have to follow everything I discuss step by step. So in this session, I'm going to try to explain the basic things you guys need to know before we go deeper. So when I mean the basic things, I sent you guys a video of the alchemist where they explain some things like that, like the ranges, the order block, the rejection block, um other things, Asia, stuff like that. So I'm not here to teach you the same concept. I'm here to show you guys how it has been refined, how to make use of those things now, because that video was recorded 2023. So let's start. First of all, I'm going to show you guys POIs. Basically, you guys know the POIs we use: the order block, the rejection block, and the breakout block. So I'm going to just try and do a quick recap on that. For those of you that don't know, first of all, when we say order block, let me give an example of a bearish order block. The bearish order block has to be an engulfing candle. So this should be the formation of the order block, an engulfing candle right here. You can see this is an engulfing candle. And now, let's say we had the wick here. If this is the wick, now where is the order block? The order block is not here. Order block is not here. This is not the order block. This is the order block from this base here. So whenever we are highlighting order block, we do it from the base, not from the wick. So another thing I'm going to say is I've explained this order block. Please mute your mic, please. I said it on the group. If you are joining, mute your mic. And I said this is the bearish order block. So let me talk about the bullish order block. So now this is going to be the bullish order block right here. We have this right here. So this is going to be the formation of the bullish order block. The bullish order block has to deal with engulfing candles. Even though the candle is like a little bit short like this, as long as it engulfs this one here, so it's going to be taken as the order block. So now these POIs I'm showing you guys now, we're not going to randomly choose 15-minute POI, 1 hour POI, any random time frame POI. These POIs I'm showing you guys have to be selected from the 4-hour time frame or the daily time frame. This is what we are going to be doing. We're going to select these POIs from the 4-hour time frame or the daily time frame. So now let's move on. The next one, we are going to be explaining rejection block. So now what is rejection block? Rejection block is 2 candles, right? We have 2 candles right here. It doesn't have to be the same candle type. It must not be the same candle. We are just more focused on the wick here. So what is the rejection block? Let's say we have this wick right here, this long wick on the first one, and we have the second one. So now if we are trying to select the rejection block here, this is going to be our rejection block. And I'm saying this rejection block here has to be selected on the 4-hour time, not on any random time frame, the 4-hour or daily. Please mute your mic. The 4-hour or daily. So if the rejection block has been mitigated like this, we are not going to be using it. The level has to be fresh. The level has to be fresh. So that's the rejection block right there. Let me give an example of bearish rejection block. It's the same thing. It's the same thing. Let's say you have this right here, the wick here. and you have another wick right here. So now this is going to be the rejection block here. The rejection block has to be here. So now if price stops here, and give confirmation, then we can start to buy. But if not, we are not going to take this trade. So now we are going to be focused on POI ranges. That's what we're going to talk about, POI and ranges. Okay. So let's look at the breakout block. I've explained the order block. I've explained the rejection block. Now let's talk about the breakout block. So first of all, what is a breakout block? Let me give you the formation of the breakout block. So let's say we had this structure right here, like this. This is the structure. So you know, if we are selecting POIs, let's say we are trying to select a POI on the 4-hour time frame, we are going to switch to the line chart, right? Except we have seen the order block clearly. But if you are trying to use a rejection block or a breakout block, you are going to switch to the line chart. Pay attention, please. If you are selecting the order block, it's going to be visible on the candlesticks like this. Visible, very visible on the candlestick. But when it comes to rejection block, it's going to appear like this. This is going to be the rejection block like this. This V formation here. This last one, if you check your charts, you can see that is going to be the rejection block, and the breakout block is something here. Is the one here. So this is the rejection, this is the breakout block, and this is the rejection block. So now let's see this on the chart. Let's say, now let's go to the line chart. Now let's select the breakout block and on the line chart now. So this is going to be the rejection block here on the line chart. The rejection block, and this is going to be the breakout block right here. You have seen this. This is going to be the rejection block, and this is going to be the breakout block. So let me go back to the chart. So you can see price.
Why not the bottom one? It's gonna be the breakout block.
Okay, this one.
Above the rejection block.
Yeah, we can also use this as rejection block, as breakout block. Even this one, all of them are breakout blocks. Even this one right here is a breakout block. Even this one up here, all of them are breakout blocks. You understand? So the thing there is we are not going to buy from any of them, right? We're not going to take aggressive entries from any of them, but all of them right here are what are breakout blocks. So we just have to see this pattern. Once we have seen this pattern here appearing on the chart, yes, then this is the breakout block. This is going to be the rejection block. So let me switch back to the candlesticks. So you can see the breakout block, the breakout block, the breakout block. You can see how price has been mitigating the areas. But you know, this is the 4-hour time frame. You cannot just set your buy position from this place, because this is going to be a 16 pip stop loss. We cannot use 16 pip stop loss. So we cannot set our entry directly from the breakout. We have to wait for those confirmation entries. I'm going to talk about those ones. So next, we are going to talk about ranges. I believe the breakout block is clear. So we are going to talk about range. Okay. So first of all, what is a range? A range starts from a strong low or a strong high. So first of all, let's explain a strong low. We have price taking out this low here and giving a break of structure to the upside. So we saw a sweep here, a sweep of market structure, and we saw a break to the upside, a break of structure here. So now this is going to show us now that this is a strong low. So, but how can we confirm this range now? We are only going to confirm the range if the swing low, if the swing low that created the higher high has been broken. So let me give you guys the example. The swing low, this is going to be the swing low right here. that created the higher high. Which of them is the higher high? This is going to be the higher high. Has been broken. Now we know that the range now has been confirmed. Without this happening, the range have not been confirmed. So whenever price is retracing all the way down, we are going to be expecting it to retrace to any key level, maybe the 4-hour order block, the 4-hour rejection block, or the 4-hour breakout block. So if you are a kind of trader that is confident taking aggressive entries, maybe you could take your aggressive entry from here, stop loss, 5 to 10 pips stop loss, then you target the externals. But if you are a kind of trader that are disciplined, you don't want to take unnecessary losses, right? You have to wait for price to give us the confirmation. This is going to be the confirmation entry, the breakout, and a retracement to a 1-hour order block, then a expansion to the upside. So normally, using
Sorry, sir.
confirmation entry.
Sorry, sir. Please, can you explain the trading range again, please?
Please, there's going to be time for questions. There's going to be time for questions. Now I'm flowing with the outline here. You understand?
Okay.
There's going to be okay. So the confirmation entry is the breakout. Normally we use two types of breakout structure when taking confirmation. This is going to be the first one. This is the first confirmation, and this one is going to be the second confirmation. Let me explain the second one. So the second one is going to be something like this. Now, the expansion to the upside. So now what's the difference here? You can see this one took out liquidity and gave a break of structure, but this one only give a break of structure to the upside. So whenever this one happens, you are going to reduce your risk. If you are risking 1% on your trade, if you see this type of break of structure happening on a POI, you will reduce your risk to maybe 0.5, 0.8. You understand? The risk calculation is based on you. You know how your account is. So this is going to be the two types of break of structure happening on your POI. So let me give an example on a bearish range. Okay, let's say a bearish range starts from a strong high. So what's a strong high? Let's say we have this high here, and price rated this high, stop hunt, and gave a break of structure. Now, this is the formation of what? A strong high. Because liquidity has been grabbed here, and structure has been broken to the downside. So this is the structure to the downside has been broken. So now how can we confirm the range? We can only confirm the range if the swing high that created the lower low, has been broken. So now this has shown us that what? The swing high that created the lower low has been broken here. So now the range has been confirmed. So now this is going to be the strong high, and this is going to be the strong low. Or we can call it weak low, sorry. Weak low, because we first got the strong high before we got the low. So the thing there is we are going to wait for price to react to any of our 4-hour levels, right? Any of our 4-hour levels, be the breakout block, the rejection block, or the whatever, you understand, the breakout block. So the thing there is, if price comes all the way here and give us our formation, right? Stop hunt and break, then we can what? Expect price to react from the 1-hour order block. Then we can sell it to the downside. Now this is the first confirmation entry model. The second confirmation entry model is going to be price gets into the POI, and giving us the second break. Now we can expect a retracement now, then expansion to the downside. You understand? So now this is the entry model for the confirmation entry. Everything I'm going to explain with the charts. Now I'm just trying to give you guys the view of what I'm talking about. So first, let me explain about internal range and external range liquidity. Okay, what is internal range liquidity? Internal range liquidity are three candle formation happening inside a given range. So now, if you see this right here, maybe if you see a range, maybe you could see three candle formation. Let me give more light on three candle formation. I think I did the other time, but let me try and give more light. So what is three candle formation? Let me give an example. We have the first candle here. Let's say this is the first candle right here. This is going to be the second one right here. And this is going to be the third one here. So 1, 2, 3. So this one now, the black one is lower. So now this makes it a swing low. This one is lower. It makes it a swing low right here. So let's go to another one here. So we have the three candle formation here. 1, 1, then 2, then 3 here. This one is going to be the third one. So you can see this one right here, this one here is lower than these two candles here. So this makes it a what? A swing low. Do you understand? This makes it a swing low. So let me talk about the internal range liquidity and external range liquidity. I believe you guys should have idea on the swing low and swing high. So internal range liquidity, basically what is internal range liquidity? Let's say we have a range like this, stop hunt, break of structure to the downside, and we have another break of structure. So now, if you guys watch the video I sent, the first break of structure happened here, right? The second break of structure happened here, right? So now this one here is going to be the inducement. Pay attention when you see a range and you see two types of break of structure, the first one, the second one, right? This one is going to be used as liquidity most of the time. I'm not saying every time, most of the time, this one is going to be used as liquidity here. You understand? So if price retrace all the way up, it's going to take out the second break of structure, then looking for a POI to sell from. So now you can see we have this break of structure happening here. Now, what is people seeing? They are seeing opportunity to short from an order block here, to short from here. But without knowing the big picture, that we have the first here, the second now makes this what? A pool of liquidity for people to start looking for trades from. So now this is going to be the internal range liquidity right here. Internal range liquidity. And this, then we have the break of structure to the upside. So once the swing high that created the lower low has been broken, then this is going to be the external range liquidity. So internal range liquidity, external range liquidity. Whenever price takes out internal range liquidity, what is the next target? It's targeting for the POI to take price to the external range liquidity right here. So as I'm telling you guys now, we don't use these things I'm saying for entries. We use them for direction, for bias. That's when we make use of this. We use them for bias, not for entries. You cannot use these things for entries. We use them for bias. The only thing we make use of entry is only the confirmation entry and the hedge for POIs. I'm going to give more light on those ones. Okay, so let me remove all of this. Now let's try and see a range on the 4-hour time frame. So I gave you guys example. I said if you are paying attention to the break of structures, you will know definitely where the inducements are on the market. If you are paying attention to the double breaks, you are going to know where the inducement is on the market. Let's go to the 4-hour time frame now and and spot a range before we take a trade. Now, this is a perfect example for what I've been explaining. So now, if you can see this properly now, this is a stop hunt here. This is the stop hunt. This is the stop hunt. Stop hunt. Mute your mic. Who is joining? Mute your mic, please. Who is joining now? Please mute your mic. Okay, we had a stop hunt here, and we have a break of structure to the downside. So now, if you are not paying clear attention to the chart, you would think that this is a strong high. Of course, it's a strong high. You think that this is a strong high, and you'll be expecting price to dump from this low. Maybe you're going to be entering from here. This is a 4-hour time frame, though. You understand? So let's say price to take out this external liquidity without paying attention to the current break of structures happening on the chart. First of all, we have the first one happening right here. This is going to be the first break, and this is going to be the second break right here. Now, these ones are happening inside. Like this is going to be the leg of the chart, retracement, and the second leg. So now, what I'm saying is, this is trying to indicate that this high is going to be taken out. But we are not sure yet because we are playing the waiting game now. We are not sure. So, and we can see this second stop hunt here. It's trying to what? Induce more sellers. This is what they are trying to do. They are trying to induce more sellers, trying to tell them that what? Now, the range has been confirmed. Try to look for a POI now to sell it. Now, what are they doing? They are trying to build more liquidity. They are trying to build more liquidity for the POI. So now, above this, what do we have? We have this perfect order block right here. This order block right here. I'm going to also, okay, I forgot to give you guys example of open close level. Open close level is also a POI we use. Let me give an example of that. Open close level. Okay, this is the example of open close level right here. So let's say we have this thing here. So now we're going to have this week. This is going to be the week. So now this is the week here. And now the open close level now is also a POI. We can use this as POI as well. This is, for example, in a bullish market. This is a green candle right here. Please don't be confused. This is an open close level. Now, on a bullish market, you can expect this to hold as well. If there is no bullish POI, let's say order block, breakout block, you didn't see any of this, price was just pumping to the upside. Likely, most of the time, price is going to use the open close level, which is right here, to buy. Right? So most of the time, price is going to use the open close level to buy. So this is very important as well in the chart, the open close level. Okay, so let me continue. So now, what am I saying? Price is building up more liquidity. They are building up more liquidity for that high. So now, if this is going to be the liquidity, maybe this 4-hour time frame POI is going to be where we are going to be. We are expecting the reaction from. So now let's check price. Okay, so playing price, we can see price took out the liquidity immediately. It gave few reaction from this place here, from the trend line. If you see the trend line, it gave reaction, maybe probably how many pips? Let's leave the calculation, but it gave the reaction from the trend line. Then after hyping everything up, what the price did, price took out the inducement now, reacting from the POI. So now what are we going to do now? As traders, what are we going to do? We are going to what? Wait. We are not yet, we are to confirm if price has started selling, because price has been bullish from here, right? Price has been bullish. So now what are we going to do now? We are going to wait for price to react in any of these key level. This key level here. This one is for like, this is not how I trade. This is just how to find it. You have to pay attention to this one because knowing how to find your range before taking trades is very, very difficult. So pay attention to this. So now price reacted from our POI. Now we are trying to expect maybe a reaction from this other block as well, this 4-hour other block, before we start taking trades. That's what we are doing now. We want to see another reaction from here before we start taking trades. So now let's play price. Okay, let's still wait. Okay, now what can we see now? Price. Okay, let's wait for the close. Okay. Now, what has price done? Price has showed that what is likely to go down because it gave us this, it gave us a rejection block, gave us this open close level. Like many information were on the 4-hour time frame now. You understand? Many information are now available on the 4-hour time frame. Now, whenever you have gotten your range, what do you do every single day? You go to now, where is our next target? If this is our internal range liquidity, this is our internal range liquidity right here. Where is going to be our external range liquidity? This is going to be our external range liquidity right here. Right? So we could expect price giving reaction to POIs, retracement dump till price takes out this external range liquidity. But listen, it's not all the time that price takes out the 4-hour range external range liquidity. You understand? So, but before that, it's going to give reaction. At least you have some trades, some winning trades before price disrespect it. But this is not what I'm trying to say. I'm trying to tell you guys, like, let's say 60 to 70% of the time, if price is respecting a range, if it takes out the internal range liquidity, it goes for the external range liquidity. So now what do we do now? We have seen this now. Let's say we enter the chart this day to analyze the market. So we saw this open close right here. We saw this open close POI, and now we saw this rejection block. Now what do? We wait for confirmation in any of these two POI. We wait for confirmation on the 15-minute time frame. Let's go to the 15-minute time frame. Now we wait for confirmation on any of this. If price gives us confirmation here, we take trade from here. If price gives us confirmation from here, we take trade from here. So now we'll be targeting this low, right? So any of these POI, that's what we're going to be looking at for now. So now I told you guys before, we use two types of break of structure. Let me do a recap on that. We have the first break of structure like this, and the second break of structure like this. So whenever you see this one, yes, high probability. Whenever you see this one, yes, you can take it, but you use a risk. You reduce your risk. Use 0.5%. Like, you know how you trade, you know your risk calculation. But I'm trying to give you what. I'm trying to tell you guys what have been working and how they have been working. So let's continue. Let's wait for price now to get to this POI before we can start taking trades. Now we're waiting for the confirmation right here. So now this is how I take my confirmation entries. Let's play price, currently wait. So now if price gets to your POI, what is the next thing you're going to do? The next thing you're going to do is you're going to switch to what? You're going to switch to the line chart. Now the line chart is going to show you the break of structure. Either the first one is happening or the second one. So this is what price is going to show you on the line chart. So let's move to the line chart. Now we are on the line chart now. What has price showed us? Price showed us, did this one went above that high? Sorry. So this one never went above that high. So now we are considering it as the second type of break of structure. So now we are not going to be trusting this setup 100%, 50%, or 100%. We are going to use risk management on this. You are going to use risk management in all of your trades, but you know when to manage your risk and know when to take responsibility for your risk. So let's go back to now we have seen the second break of structure. Now we are not going in full margin. Now what's the next step? The next step is we are going to go to the 1 hour time frame to take our POI. The 1 hour time frame using the order block, the 1 hour order block. That's what we're going to use. Now, this is the 1 hour time frame. So okay, pay attention, please. This one is very, very important because some people, some of my previous students have been battling with this question. If the 1 hour time frame order block has not been completed, but the 15 minutes time frame has given a break of structure, you can see the 1 hour order block has not been created yet, but the 15 minutes has given a break of structure. Now let's move back to the 1 hour so you can see what I've been saying. So now the 1 hour time frame has given this order block right here, but it hasn't finished melting, right? It hasn't stopped forming. So now we are moving to the 15-minute time frame. Now our entry is going to be as quick as possible. That's why, sometimes people take their trades from here, from this entry. The aggressive traders take their trades from here. And now we are going to try to enter with them. That's what we are trying to do now. So the movement is going to be very, very fast. So if you're taking confirmation entries, you have to pay attention very, very fast to the market, to what market is going to print out. So now this is going to be the entry from this level right here. Then your stop loss should be on the swing high. Most of the time, your stop loss should be on the swing high, right? That's where your stop loss should be. Then you target this low here, this external liquidity. So why did I call this external liquidity? I call it external liquidity because if you look at this here, we had a stop point here. This is just I'm just trying to show you guys why we call it external liquidity. We are not using ranges for entry here. You see the break of structure here, and now the retracement. Now where is it? This is going to be the external liquidity. The swing, where is the swing high? Okay, pay attention now. Where is the swing high that created the lower low? Where is the swing high that created the lower low? So now this is the swing high that created the lower low. Right here, it has been broken now. The range has been confirmed. So now it's trying to show us that this is the external liquidity. So now if you could play price, so now we could play price, we target this low. This is the safest place for targets. So now we are out of the market, right? So now since we have known the direction of the chart, every single day we keep doing the same thing, except if Asia creates a strong low or high without any higher time frame POI above. I'll do a recap I'll tell you guys what I mean by that. So let me give one more example. Now let's wait. After this day, you are done. I said you guys should follow the rules I'm going to give, because if you are not following the rules, you are going to be very, very lost. First of all, we don't trade every single time. We have time we trade. So if you're not Nigerian, we trade from 8 a.m. in the morning, 8 a.m. in the morning Nigerian time. Please, after you could convert it to your own local time, 8 a.m. Nigerian time to 4:30 p.m. That's when we trade. That's the time we trade. So now, after this trade, this is I think this is 11, I think. Okay, this is 9:30. After this now, we are done for today, right? We are done for today. We are waiting for the next day to give us a setup, then we can trade. That's what we're going to be doing now. We're waiting for the next day to give us a setup, then we trade. If it's a loss, if you took a loss on this first trade, yes, you are done for the day, right? If you took a loss, you are done for the day. You don't come back to say you want to take another trade. Anything you are doing is just based on you, because we are waiting for every single setup every day. If it did not happen, we are not taking any trade. So let's wait for the next day. Wait for the Asia section on the next day. So now let's patiently wait. Now I told you guys, we are either taking the trade only if Asia, or only taking aggressive entries only if Asia gives a strong high or a strong low without any higher time frame POI, right? So let me explain this. I'm going to explain it very well. So now paying attention to this price action, what are we seeing here now? Asia has given us a strong high, if I'm correct. And the alchemist said, whenever Asia prints a strong high, Asia strong high or Asia strong low, the 4-hour time frame is going to create an order block. If you have been paying attention to the video, that's why I said everybody should pay attention to the video. You understand? If Asia creates a strong high or a strong low, the 4-hour is going to print an order block, right? When the 4-hour prints the order block, that's when you are going to be taking the trade. So now we have two things we do every single day. We do two things every single day. First of all, number one, we wait for a high time frame POI to be mitigated, then we take confirmation entry. Number two, we wait to see if Asia creates a strong high or a strong low. Like that's two different things we do every single day. So in this day, we saw that Asia creates a strong high. So now what do we do now? Let's move back. Let's check the 4-hour time frame if the order block has been created. If no, we're not taking the trade. Okay, now this is the 4-hour time frame right here. Now this is the 4-hour time frame. And the 4-hour time frame, I gave you guys the formation of another block. Another block has to be what? An engulfing candle, right? That's what the formation of another block is. An engulfed candle. So if you are seeing this right here, you should know that properly. This is a very built order block. This is a well proper built order block right here. And see, this is a well built order block. So we are going back to the 15-minute time frame. Okay, we saw a rejection. Let me highlight the rejection block as well, but I don't use rejection blocks. We are following what the alchemist said now. He said the 4-hour order block is where our entry is going to be. But we can also highlight the rejection block as well, just in case, right? But this is what we are looking out for. This is just going to be maybe if I decide to disrespect the order block, tap